Hello there, and welcome to a special edition of the Kluge Wealth Advisor Group Client Connect video for Tuesday, March the 10th. There's been a lot of geopolitical headlines recently related to the war in Iran, and we want to take a few minutes to share a few thoughts with you here today. So this is not going to be a long video, but there's a few things I did want to get into and a couple observations I want to make. Now, the situation is very, very fluid, and so I don't want to be focusing on particular events, but I do want to take away a few big picture observations that I think are important here at this point, about 10 days into the conflict. The first one, and the one that I would actually take the most heart from and gain the most comfort from, is the fact is that despite the dramatic nature of some of the headlines, is that both sides in this conflict are acting with restraint. Both sides are thinking about what happens once this is done. And you can see this very, very clearly from the fact that none of Iran's oil export facilities have either been self-sabotaged, i.e. the Iranians destroying their own facilities to in attempt to punish the West, air quotes, and you've also not seen the Americans or the Israelis destroy Iranian export or oil facilities at this point to any great degree. So the fact that everyone is thinking beyond the sale, everyone is thinking there will be an end to this conflict, and I want to either, in the case of the Iranian regime, remain in power, or in the case of, the U.S. and Israel, I want to fulfill my objectives. Everyone's thinking beyond that, and they're thinking into what happens after the war. So that's a very, very good thing. Everyone's thinking about the future. No, there's not this myopic thought about we just have to take revenge or we just have to hit them hard. Everybody seems to be acting rationally at this point. So although it's unpleasant and always any loss of life is regrettable, all sides are acting rationally at this point. Second observation I would like to pull back and make here is that, despite the fact that there has been some market volatility over the last few days, I would actually take the way the market's been acting in the situation as a huge positive. And the reason for that is that if we look at what happened here year to date, right, we've seen markets roiled by private credit concerns. We've seen markets roiled by AI disruption of software. We've seen geopolitical headlines. We've seen tariff headlines. And now we've seen a conflict in the most sensitive part of the Middle East. And what we've observed is that markets have bent but not broken. And the bottom line is that something that does not go down on bad news probably isn't bearish. So markets don't go flat. They're either going up or going down. So something that doesn't go down on bad news probably is, positively inclined or bullish, as we would say. The second thing I'd like to bring up in regards to this just as well is that, the market that is most directly exposed to this whole conflict, which is the Israeli stock market, of course has come under some pressure. But if you look over the last few days, especially as the war started, their market did actually rally quite quickly. So I think it's important to note that, and it's important to note that the market that is the most sensitive to this is it's actually starting to do quite well. The third thing I want to point out is that aside from some of the observations I'm making here, I'd also say that there are certain key parts of the financial system that are definitely very calm about this. And we're going to put up a quick slide here. This slide is from the U.S. Federal Reserve, and it just shows high yield credit spreads. Now, high yield credit spreads, it's just a fancy way of saying how much does a low grade issuer, a low quality issuer, how much extra do they have to pay over government bonds in order to get a loan? And we've highlighted a little yellow on the side of the slide there, and you can see that really those spreads haven't changed. That there's not a lot of belief that there's going to be a long-term economic impact from this, because there's not a lot of movement in what you would charge a low-quality issuer to have a loan. Now, the next slide we're going to put up here is actually another slide, and this is of the U.S. dollar index. Now, traditionally and even contemporarily, the U.S. dollar is a safe haven trade. When there's times of geopolitical or economic stress, the U.S. dollar tends to move up very sharply. You can see this through 2022. If you were to look back at a longer-term chart, and you can see here in this chart that over on the side here that really the U.S. dollar is just back to where it was at the beginning of this year after weakening a bit further. So again, no big reaction, and I think again we should all take some heart from that. And that sort of leads me to the next part of this video, really. And I just wanted to add a couple of other sort of big picture perspectives here. Right? The first is that we always want to remember that we're dealing in a world of preparation and not prediction. There's no way for us to know that any of these things are going to happen. However, we can be prepared. And we do know that, post-COVID, the world has been more volatile, or at least the markets have been. And for that reason, we do have some cash built up in the portfolio. So if we were to see a larger decline in the markets, we would be able to put that cash to work and buy the dip and turn what is an uncomfortable situation into one that is wealth building. The other thing we wanted to always focus on is this is the important role of behavior. Now, there's an interesting fact is that the 10 best days in the market are often very, very closely associated in time with the 10 worst days in the market. And we're going to put up another slide here that shows what happens if you miss the 10 best days of the market. And it's pretty clear here that you can see is that really what happens is that what turns from a positive return becomes a negative return. And I think 2025 is a great example of that. If one were to think that, okay, well, Trump tariffs are in, we've got to sell, and you were to sell out sometime in late March or early April, you would have missed the entire rally back. You would have had a negative year to date as opposed to a positive 2025. So I think that's very, very important to remember that, in what we're doing here. And the other thing we always want to remember, and forgive me for checking my notes here, is that the impact of geopolitical events is often very short-lived, and when the impact is over, it dissipates very quickly, and markets rally back to where they were and typically resume whatever trend that they were on. In this case, we're in an uptrend. So when we take a look at the entire picture, we just see that the main combatants are showing restraint at this point. That markets have bent in the face of a lot of bad news, but certainly not broken. Knowing that as you think about your portfolio construction here, that you are prepared for this type of volatility, whether it's because of geopolitical events or economic events. And when you also understand that the role of behavior and the importance of being invested over the long term come to play, is that we really want to just all tie this together and just make sure that we're really bringing some big picture perspective into the conversation here. Now, I understand that you may have certain questions, or there may be things you want to touch on in a little bit more detail, or go into a little bit more on a technical basis, depending on really where your interests lie. And so what I'm just going to say is, please, if there's something you want to discuss, pick up the phone, give us a call, schedule us on Calendly, send us an email. And we also publish some great, more frequent information on Twitter, and so you can see us there on X. Just following us at Kluge Wealth. And again, if there's anything on your mind, please reach out, give us a call. We are here to get the job done. And thank you for your trust and confidence.